Hi guys, this is Dov from the Sovereign Trader channel. Finally finding time to record CoinWeek's weekly update. So to those of you that don't know me, I'm a financial market swing trader based on classical chart patterns. I have around 2.5 years of trading experience in total. In those years I experienced with several trading styles, strategies and methods. In this channel, I provide my views on the markets along with trading education and personal positions. Moreover, I'll share with you my journey to becoming a consistently profitable multimillionaire and sovereign trader. So let's start off with a weekly update. TLT, first open position, price made a small pullback and is coming down back. I've adjusted my stop loss after this minor swing high was made. I am considering to close 75% of the position at this major weekly swing low. I'll need to see how price is approaching this support level price action wise, and this will help me to decide whether I will let the position run to the measured move, to the measured target of the pattern, or close the 75% of the position at the weekly support. Moving on to AZ. To those of you that watched the last weekend update, so I think it was when price was here on Wednesday. So price is seemingly forming some kind of a flag here. Nothing to add much actually. I'll leave my stop at this point, and expecting that price will break this resistance level. We have these lows here and actually these lows too. So it's a pretty pivotal resistance point. So I'll expect price to break this resistance in current week, while leaving my stop loss at the same place it is right now. NEE. So it's a very long, lazy, complex reversal pattern coming after very long time of an uptrend. I would say you can say decades, or for sure a complete decade, where price barely came down below the 200-day MA. Now we are below it, and let's say dancing with it, hugging it for quite a long time. You can say for March of 21. Price broke down. I progressed the stop loss to the breakout line. I'm considering to take it back a bit higher above the low of this, above the high of this bar, and that's because it's a very long and lazy pattern, and such patterns usually take time to break completely and move to the direction of the pattern. But at the same time, I still want to stay let's say loyal to my aggressive risk management rules. So I'll have to see how price behaves in current week. So far price looks okay. It's a small consolidation, maybe before continuing down. Let's hope that we won't get too deep of a pullback that will make price close back below the boundary and also take us out of the position according to the adjusted stop loss. I believe that according to current day's closing price action, I will see and assess whether I leave the stop loss at the same position or put it above a bit higher. LANC. So I actually left myself a note to assess the stop loss adjustment at the end of current day price action. So we have here some kind of head and shoulders, shoulder, head, shoulder. Positive point is that this shoulder, this shoulder high is lower than this shoulder high, which means that sellers are more aggressive and providing me the indications that they want to push price lower. We also have some kind of launching pattern, which is a cup and handle that adds another positivity and reliability to the pattern. I would say generally that always when there is a bigger pattern launched by a smaller pattern, that provides reliability to the breakout and to the success probabilities of the setup. So far price is dancing with the breakout line. I can see why, because we have low here and there might be a support area, I would say, from these lows. Let's look at it that way. From just a moment, these lows to this area, some kind of support that holds price. I can say that on this position I might not advance the stop loss too early, because it's already quite tight. So the best scenario will be that the coming day will continue down and I will be able to adjust my stop loss to the low of this, to the high of this doji bar. Another thing that I must keep in mind that next week we are having an earnings report, which is not a time where I want to trade, so I need to keep that in mind. So actually the position is quite in a complicated place, I would say, because I'm not sure that price will be able to reach target before earnings report, and probably price will consolidate before the earnings report, because everyone is waiting to see how the company is doing before they are taking any trading or investment decisions. So we'll have to see how price behaves. Maybe I'll need to close it at a small loss or small profit, wait after the earnings report, and then re-enter if a proper entry will show up. CXW, it's a position that I closed last week. I closed the position on this bar. I re-entered that position yesterday because I understood that I made mistake here. Price just came down to test the 200 AMA. The following day it held above it, and the following day it held above it too, with the pretty decent bull bar closing on its highs. Due to the fact that it's second entry on my side, and due to the fact that we had 4 bars closing above the 200 AMA, I'm not planning to let price close back below the 200 AMA, and that's why I did not put my stop loss below the pattern boundary or breakout line, which I usually do, and that's why I'm leaving the stop loss at this place. And if price will continue higher on the coming day, I'll probably adjust my stop loss to the low of this bar. ROIC, it's a position that got closed yesterday. Stop loss, adjusted stop loss hit, so price had a decent, proper, well-defined head and shoulders bottom, in a good context, coming after a down move or a decent downtrend, if you want to look at it that way. Price moved up, then started to slow down, lose momentum, and show weakness. I didn't want to get back to loss territory, so I adjusted my stop loss to this minor low. There is a possibility the price will come back to just test the 200 AMA and continue higher. If that's the situation, and I exited. I could have been profitable trader, but either way, I followed my rules of aggressive risk management, and this is what I'm satisfied with. HPE, a position that I closed, and I'm monitoring to see how price behaves. So there is a massive, call it complex reversal, call it head and shoulders, continuation, or it will be continuation, not bottom for sure. So price had a strong thrust breakout, enter the position, bad follow through, close below the breakout line. Weekly candle, it's a more of a shooting star, but also doji, closing back below the pattern, sweeping all the lows to the left. So not showing good signs of strength here. So position have been closed once price broke below and closed below the breakout line. Something that I'm finding out is to be more cautious and careful with long and lazy patterns. And by that I mean that the longer and the lazier the pattern, the clearer the breakout confirmation I want to see. So this is something I'm paying attention to. So I can say that the longer and the lazier the pattern, the higher standards I will put for the breakout confirmation, to confirm me that it's let's say good entry, and I'm a bit complicated. I'm going again. So the longer and the lazier the pattern, the clearer and the stronger the breakout confirmation I want to see for me to enter the position. Yeah, it was a bit of a language stack here. Okay, JPM, there is a high probability that I made a mistake being too aggressive on this position. It's a thought that came to my mind when I closed the position or when I adjusted the stop loss. It was more than obvious that after a strong move like that, some kind of pullback or consolidation will come. So price might be forming some kind of flag, and then it will continue higher. So another thing for me is to be less aggressive with stop loss management in positions that are coming in my direction firmly and strongly. Let's say let the good boys do their work and not interrupt them, and stop the bad boys pretty early and avoid avoid them, prevent them from making damage. CW as a position that got closed by the stop loss, and then gapped up and moved strongly to the upside. Either way, according to my rules, I should have closed the position at this point because of earnings. So same as price gapped up, it could have gapped down. And I showed you an example of QCOM that I had the prior week, and we'll go through QCOM today too, so I can repeat this example very quick. So these are the candidates for the week, guys. we have a RPD. It's a diagonal pattern, symmetrical triangle, not the kind of patterns that I usually trade. I usually trade horizontal patterns. I would say actually 90% of the time I'm trading horizontal patterns. We had a strong breakout, gap up, several actually two bull bars, while this bull bar was the actual breakout bar closing on its high. I'm saying to myself that I want to see a pullback or a successful retest before I feel comfortable enough to take the position to the upside. And I actually write it to myself here so I won't forget that. Okay, as like I wrote, wait for pullback or successful or both successful retest before considering an entry. So this is RPD. Now that we are talking about the candidates, let's go for the duration. So 26 bars, 26 weeks pattern within the normal and good duration for patterns that I usually trade. I usually trade between 8 to 26 weeks patterns. These are my let's say preferable patterns duration. Coming from Peter Brandt, I mentioned him, a very experienced classical chart pattern swing trader. MO 43 weeks pattern, complex reversal, so it's a head and shoulders with many shoulders, head, shoulder, 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 and shoulder. Same here. I would want price to break out. I took here the 100-day ATR of 10-day period. I think that this is a bit too aggressive. I will take it. I'll shorten it, tighten it a bit. But here too, I want to see proper close below the breakout line. Overall, the context is okay. We are consolidating after a very massive move down. You can say that overall we are in some kind of a downtrend, so we have a decent and long downtrend here, some kind of a macro correction, and then we might start another downtrend. We are staying below the 200-day MA, getting rejected by it, so that's a good sign. We are actually just waiting for price to provide with breakout confirmation before we take the position. QCOM. So if you guys remember, I had a position something like that, if I'm not mistaken. More or less, either way, price gap down on earnings day, so same could have happened in CW. Instead of gapping up, gapping down against me and making me lose more. So I would just suggest to you guys that do not hold stocks into trading into earning days. Not a good idea, because you can sometimes get a gap into your direction, but the more important thing in trading is to go by proper risk management, and let's say be more focused on the losses and the risk instead of the potential profit. So therefore we want to avoid holding into earnings because of the chance that price will gap against you and make you lose more than you should have lost. Okay, QCOM 23 bars head and shoulders, and if we take the head and shoulder Head and shoulder failure, it will be 25, maybe 26 weeks. I do believe that price will break down below the right shoulder this current week. It's one of the patterns that I am waiting for. Actually, one of the favorable candidates for this week. We're just waiting for proper and strong break below the right shoulder. Docs. So this is actually another head and shoulder failure pattern that I was planning to take. I was very busy at the day of this bar. Either way, it was an earnings day, so well, it was earning day, so I could have entered on this bar actually, and along with that, it wasn't a gap down bar. It was a bar that moved down, okay, within the trading day. So I maybe could have taken an entry once price has broken below the 200-day MA, maybe at this point around the 91 area. So I missed this one. Now I'm looking at the pattern more of like a triangle. So I'll see, maybe price will come down, test the 200-day MA, and then come back below I said triangle, a rectangle. Come back, test the 200-day MA, and then break down below the lower boundary of the rectangle. This stock is not the best candidate for this coming week. I'm monitoring it because the context is so good, and I mean, price is moving up for a very long time, and we might be starting some kind of a long downtrend, and I want to make sure that I have the ability to identify which pattern will start this strong downtrend. We can't tell that the head and shoulder failure is the one that started it, but I'm looking for another pattern or another breakout that will allow me for proper entry. J and K. So we have here a decent, clear, with good context, ascending triangle, 22 weeks, coming up above the 200-day MA, starting to hug the 200-day MA, and the 200-day MA is actually starting to invert to the upside, coming after a very long downtrend, and price is now contracting into the pattern that might be the pattern that launching the breakout to the upside. So a decent position, a decent candidate. PEG, another head and shoulders failure pattern. Let's assess the weeks. So it will be 31, maybe 32 weeks pattern. Same here, price is, let's say, at all-time highs area. Not exactly all-time highs area, but it's at the highs overall. So we have a strong and sharp move down, correction, and the break back below the right shoulder, which is the last weekly major swing high, might be the signal that confirming the continuation to the downside. So PEG is another very decent candidate for the coming week. ARRY, last week we had, like, I think it was a 17% gap up, something like that. Yeah, 20, okay. So we have a rectangle here, a pretty well defined. The upper boundary have been tested several times, 1, 2, 3, 4. You can call this, if you want to count this one, is 5. So it's around 5 times price is breaking above 200 AMA. We might see some kind of a pullback before we are being able to break out, and actually I would want to see breakout before a pullback before price continuing to break out of the pattern, just for the sake of not entering the pattern with this momentum and let's say long and extended move up, and get a pullback after I enter that might shake me out of the position. So due to the sharp move up, it might be like a rubber band where you extend it to one point and then it comes back strong against you. Not probably the situation here. I don't believe that price will come back strongly down, but a pullback of some sort will for sure be here. So yeah, expect, I'll actually write it for myself. Expect 7, wait. So wait for a breakout of some sort before entering the position, and preferably before the breakout. WBD, another ascending triangle. So far it's a 17 weeks. I think that price might come for another test of the diagonal boundary, or it might be the 200 AMA and from there continue higher. So we have, I think, a few days and even another week for this setup to materialize. Either case, I'm following it for the chance that it might materialize in current week. We are above 200 AMA, the pattern is clearly defined, the upper boundary is tested 1, 2, 3 times and will be tested for the 4th time or maybe 5th time on the breakout. We are coming after a very long downtrend, and you can actually also look at it as some kind of head and shoulders. We have a small shoulder here, head and shoulder, or even a bigger ascending triangle. Okay, but for now I will look at it as this kind of triangle. So that's about WBD. HYG, another ascending triangle, good context. Still price is starting to dance and hug the 200-day MA. 200-day MA is starting to curve up. We have just a moment. Yeah, so we have 22 weeks, so that's good. If price will continue higher, it will be a good entry. If it will continue lower, we might need to wait a little bit for the setup to materialize. Upper boundary, horizontal boundary have been tested 1, 2, 3. You can separate this, so look at it as 1 point, but I would say 2 points or maybe 3, 1, 2, 3. So another decent candidate for the coming week. DSX, so it's a head and shoulders of some sort, head and shoulders top, shoulder, head, shoulder, or this is the shoulder, and is followed by a launching pattern, which is a rectangle that is forming right now. So excuse me guys, yep. Once again here I want to see price breaking properly, and I can see now why I placed the breakout alert here, because we have quite a lot of lows lying below the breakout line. So it's here, 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 and here too. So I want to be as sure as possible that the breakout is proper and is closing below or at as many lows there is. I think that we have also a few days before this position, this setup will materialize. Let's see the duration. So the head and shoulders is 46 weeks, and the rectangle is 18 weeks. So this is the kind of patterns that are very good, because we have a mega pattern, you can call it a bigger pattern that is longer than 26 weeks, followed by a launching pattern, and in this case it will be the head and shoulder launched by the rectangle. So overall things are good. Price is rejected by the 200-day EMA. We need a decent breakout that will break below this and the several lows that are awaiting below price for the confirmation to enter short the position. IGF, so another head and shoulders pattern, 34 weeks in duration, at all-time highs area. Okay, same here, nothing much to add actually. It's a well-defined pattern, horizontal. You can look at it as a rectangle or head and shoulders, doesn't matter, because either way you would take measure target from the neckline to the head area, so you can be conservative and measure it to the rectangle upper boundary, which the upper boundary is at the place where there is the most amount of touches, or you can go for the tip of the head and shoulders head. Either way, more or less the same target, same measure target. This might actually take us to the almost to the low of the major weekly swing low. So another pattern that I think will need a few more days to materialize, because price is still not that close to the breakout line. So this is the last candidate for the coming week, guys, and that's it for the update. I hope that I will manage to make a weekend update or mid-week update. It probably, if I will do it, will be probably end week update. I have a bit of a busy week this week, so that's it for today. I hope you gained value from the video, and I wish us all best of luck in the coming trading week.